something that has come up in the free chat group. Okay. Now, it is something that we cover sort of in the chat group, the paid chat group. So this has come up in the free chat group, and I haven't rectified it, or I haven't said it because it takes a lot more to cover and go through than can be said on a couple of words on the free chat group. Okay, so someone put up a screenshot on Amazon that they have been stopped out, and then a bit of a discussion came along and says, "Look, it happens all the time, and it is stop loss hunting and all that sort of stuff." Okay, now just to sort of give you an understanding of what stop loss hunting is. So stop loss hunting is where you have an order. So you know that we have an order, we have a stop loss. So just imagine we were looking to place this trade here. Okay. So if we were looking to place this trade, we would have an entry. I'm going to change it to green. So we would have an entry, just say on this right here, and we would have a stop loss. Okay, so segments, and I'm going to change it to red, stop loss. Now, where would our stop loss go? Where can anyone tell me where we think the stop loss would go? Would it go underneath there, which is just say 3,200? Would we go underneath here, which is 3,160? Would we go under here, which is 3,114? Would we go under here, which is 2,978? Or would we go under here, which is 2,880? So we have we have 1, 2, 3, 4, or 5. Which option? Where do you think our stop loss should go? So 1, 2, now I have 3. 2, 1 and 2 are winning so far. 1, 1, 1. So 1 is the clear winner so far at the moment. 1, 3, 1, 1. Okay, so it looks like 1 is the clear winner. So there. Okay, so that's what we have here. Now, when we talk about stop loss hunting, now stop loss hunting is a term that is used across the markets to manipulate the market. Now, just imagine you are, say, a bank, and you want to say someone is after coming in, and they say they need 2 billion in cash. Okay, so for some reason, it's come into the bank and said they need 2 billion for cash. Now, unfortunately, the bank doesn't have that liquid capital in their actually coffers. So what they have to do is they have to go to one of the traders and go, look, we need 2 billion out of the market by the end of the week. Okay, so that's what happens. So now we know that Amazon, so just say the bank needs the liquidator, and the thing they're looking for is Amazon. We now know that the market is going up. Now, what may happen is the natural progression of this bar is it opens here and then it goes up. That's a natural progression of that bar. Now, what stop loss hunting is generally is when I need 2 billion out of this market. So what I will do is I will short or sell maybe 250,000 of this. Okay. And what will happen is I will take out the low here, which means that everyone that was buying here, their stop loss is triggered out, which means then that they have all had a loss. So I have now burned 250,000 to drive the price down. So anyone who is in the sell position is after getting triggered out. Now you were like, oh, sugar, look, the trade, I thought the trade was going to go up, and all of a sudden we have the sell here. And then what happens is I then get the rest of my money and I slowly start feeding that into the market. I slowly start feeding that in, and all of a sudden the bars start going up quite rapidly. Now, the problem is now because you see this trend here, what happens to all the retail traders that jumped in here? They start jumping in with new trades. So they start jumping in there. They start jumping in there. Okay, now I have taken profit from here. So this is where I first started pumping money back in. And all of a sudden, I'm now scaling into the position. Now, this is my last position in the market. So just say I put my last position in here. What I'm going to start doing as a bank, I'm now going to close this position. But this position that I've closed, these new retail traders here are still driving the market, even though I'm now pulling this position out. So which means I've taken profit on this one. So the market then can start to continue going up. Okay. The only difference is the bars are starting to get a little bit smaller as they're going up and going up. Why? Because my 2 billion that I'm trying to get out of the market. So there's my first entry. I've now closed it. My second entry is now closed it. My third entry is now closed it. My fourth entry is now closed it. And now we're at the top here. And the only people that are left in the market is who? The only people that are left in the market now are the retail traders. Again, like I say, I'm a bank trader and I have a bucket load of money. So I have now got the 2 billion out of the market that I wanted. But has anything else arisen here? Is there anything else after happening here now? Is there anything else coming up literally at this particular point as a bank trader that I can see happening straight away? Can anyone tell me? A possible short. Alistair, what do you mean a potential short? Adam has said a double top. Absolutely. Now, all of a sudden, because you see the bars here, the bars are starting, they're nice and big. Now they're starting to get smaller, 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 because as a trader, now I know the liquidity is not as strong here as it was when I was in the market. So all of a sudden, I can see this across the top. Now I have 200 billion. Now I may leave that aside. And obviously I already have a pot for trading myself because I'm a day trader in the bank. And what I will do is I will actually start shorting the market right here. And the same thing happens again. So now I've created a position long and I've now created a position short. And the difference is now I'm getting in with a decent amount of money, but I'm not jumping in with the whole 2 billion that I was wanting to get out. I got in with a decent amount of money. I've now made the market short. Now we have all the short sellers jumping in here. And all of a sudden then I have now made 2 trades out of 1. Does that make sense? Now, people start to think that stop loss hunting. So the reason I'm going through this is because what has happened here is not stop loss hunting. This under no circumstances is stop loss hunting. Okay, so I wanted to go through this for that particular reason. Now we talked about, so there's where the stop loss is, but is that where the stop loss should be? Is that where the stop loss should be? Is that the correct place for the stop loss? And the answer is no, that's not the correct place for the stop loss. That is for a CFD trade. We're looking to try and make a very quick turn. Now I have no trend line here. I have no horizontal line. I've absolutely nothing. I actually don't even know whether this is the actual trend of the market. There's nothing here that has jumped out at me and said that this is where the stop loss should be. So if I go back and get my mouse over here, I'm going to zoom out and have a look at the market. Right. So what have I now seen? So where should my stop loss be? If I'm taking a trade here, where should my stop loss be? give me approximate number where you think the stop loss should be. Someone said about 2850. Okay. There, I'm assuming that's where you're talking about. Anyone else have any? Is that correct, or is anyone else have a different take on this? So remember, when we're talking about stop loss hunting or something along those lines, when we're talking about stop loss hunting and stuff along those lines, this is what should happen. Okay, so the market goes up and then the market goes down. So the market should take out that low. It shouldn't take out the low here. It should take out this low. Because if we're looking at trading, where do we think is the highest amount? Where do you think the highest amount of stop losses are? There, underneath this level. So probably people are still giving us a little bit of a low here. So the idea would be is we would have to take this out. Now the problem is that this is a huge movement. This is a huge movement. So for me to get back my money as a bank trader, I now have to drive it past this price here. So this is not worth its while for me to be stop loss hunting. Okay. So just want to make sure that that term that you guys are looking at and using, I know I talked about it on the likes of the boot camp, but making sure that you guys are not misusing that term, because what's happened here, that's not stop loss hunting, because where does the stop loss go here? Is it underneath there? Is it underneath here? Is it up there? I need to change that. So we don't know where these stop losses are. And that's the problem at this particular scenario. Is that solid enough? No. Is that one solid enough? No, again. So, and then because this has been pretty flat, there's another one there. Is that it? No, the ideal one is right here. So we have to make sure that we're taking out the likes of the low of this. So make sure you understand what the different terminologies are if you're sort of using them. Now there was, okay, so someone has asked, that trade is not valid as a buy today. Can I confirm? So after having a look at the analysis here, would you guys agree that this trade is something that we could take? Or would you agree that this trade is not something we can take? So yes for trade, no for no trade. Okay, great. So everyone has said no to this trade. Well done. Because the main reason is that we're not sitting in any structure. There's no area for this to say that it's bouncing. Now, if it was down here, I'd be like, absolutely, I'm taking that trade. Why? Because I have 1, 2, 3 bounces. But here, we're in this no man's land. If that had a hit here, which it did, we also took that trade up there. We also took this one here. See this trade here? We took that and it went up. Now it didn't hit the 3-1 as we wanted it, and then you would have got stopped out. But some people would have managed and trailed that stop, which means they would have got maybe a 1, maybe a 1.5 to 2 out of that. But I wouldn't have hit a 3-1. But that was the reason there. Why? Because it bounced, and then retested. So there was a valid trade there. But in this particular moment, we are in this sideways trend. So just to get you to understand that this is a sideways market. Now look, we have the sideways market, and this is what happens. And this is what happens with the likes of the Amazons of the world, the likes of the Netflix, the Googles, the likes of this. They go sideways, and they could go sideways for 6 months or a year, and then take off again, and then take off again. And that's the difference. Make sure that you understand what's going on with the market structure, because the structure of the market is king. The structure of the markets is king. Look, say this one here. We had the very same structure here. We had a horizontal level there, and we had another low down here. Look, and the market was pinging between these two areas, and then it actually had a softer level through here. It actually had a softer level through here, and then it eventually took off. And eventually took off through there. Okay. And that's the thing. You want to get the structure correct, and you want to be buying it on these lows. So that means then if the market, now not if the market, when the market takes off, that we're in at the correct point. Now, the perfect example of that has been crypto. Crypto has been the perfect example of that. How many times has it come back and touched the 30,000 on Bitcoin? How many times has Cardano come back and hit that level that didn't trigger me in? How many times has the rest of the crypto come back and hit that very same horizontal level? And now they've taken off. Now, again, we have no idea how much of a jump. We have no idea how much of a run that's going to happen. So we'll come over onto this example. So we're going to come over onto this example here. So my question to you guys here is that stop loss something? So is this one here, would we class that as stop loss hunting there? Okay, so the general consensus here is yes. But what do you think my answer is going to be? The general consensus here have said that this is stop loss hunting. But my answer is no. Where should the correct stop loss be? Where should the correct stop loss be? Correct stop loss should be below this one here. We should be below this level here. So that's where the level is. Now, this is a soft level. Look, it's broken. Okay, bounced. Now, technically that is broken, but we'll class as a bounce, bounced, broken. So then is this a serious level then? It's a short term, mid level. So it's a medium level, but this is not a strong level. So this could be classed as a fake out. I wouldn't class this as stop loss hunting, a fake out, fake breakout, and then it wins. So this is definitely, this for me is not stop loss hunting. This is just a soft level here. Okay, so again, we have to make sure we know the difference between hard and soft levels. So for me, this is a semi decent level. I would take a trade there, absolutely. May have got stopped out and then went. So we have to make sure that we're looking at the correct things. We're looking at the market structure, because for me, that's where the level is there. That's the floor. Hit it once, bounced, hit it twice, bounce, hit it 3 times, bounce, and hasn't broken through it. The only time it broke through it is when it went through it here. Okay, that's the only time I went through it. Now, people will say to me, "But Henry, look at the wick here. The wick here, this is not classed as a breakout. Why? Because the body of the candle is above that level. So the body of that candle is above that level. Okay, so just make sure that you know the difference. Another one that was suggested is oil. And we've seen it on the likes of oil. Now we can see here that oil is boom, 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 boom. Okay. Give me a second, have a look at that level. Okay, I'm going to bring that down a fraction and put it there. Okay, so there was another suggestion that this bar here also was stop loss hunting here. So this low here was suggested that it was a classic stop loss hunting here. It had broke a little bit lower. Now the difference here is that this is completely wrong. Why? Because this low here is higher. This one here is also higher. So that is completely wrong. Again, in this particular scenario, if this market came down, so it opens here and it comes down, it hits that level, and then starts going up, is that now stop loss hunting? Bearing in mind, we now have a lower low here. In your opinion? So yes, it is. Yes, it is. Anyone else? Just 2 people have said, give me an answer. Come on, I'll wait for a few more answers before I will answer that question. Because again, there's no right or wrong answer. It's you giving your opinion, and then I will either correct it or agree with it. Again, so this is the idea of it. I'm trying to, it's let me know what you think. So the general consensus so far is yes. Okay, general consensus is yes. So Alistair said zoom out. Well, Alistair, I was zoomed out earlier on. So I know I'm very quick at looking at these things and seeing it, but Thomas, I'm not going to explain that again. Just to, you can just watch the webinar. But stop loss hunting is when a low, so see this level here, this low, and a low is taken out, and then the market turns around and goes in the opposite direction very, very quickly. Okay, so that's what stop loss hunting is. Okay, so in this scenario, this is not stop loss hunting. Okay, so we have a low here and we have a lower low. But what's this here? This is a level. This level here at 64.58. This is not stop loss hunting. Why? Because this has now hit a level. This has now just hit a level. If I zoom out, which I did previously, and look at this, bounce, 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 okay? And we're in that area, we're in that zone. So this is not stop loss hunting, this one. Get it now back to sit in the right place. So this one here is not stop loss hunting. Why? Because it is back in, because it's come back to this level. This is the level that we've worked out historically. So this is not stop loss hunting. Stop loss hunting would be if this happens. So I'll clear all drawings. If this happened, this would be classed as stop loss hunting, that we have a bar that comes down, it hits the floor, goes up, then we have a big old sell-off, and then we get buyers, 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 buyers. That will be stop loss hunting, because how many orders will have their stop loss just below here, below that level? Okay, and that's the idea. Now, the idea of this is the bank needs you guys to jump in, maybe here or even here, halfway up this trend. And that's the idea. The banks, so the bank trader will have a trade here, 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 and here. Okay, so he will scale his position in maybe over 4 or 5 positions. And then the retail traders will go, okay, well, we're in the market here, 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 and here. And what will happen then is the yellow ones here will be the exit. And then the bank trader will be, look, I'm exiting, 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 exiting. And the hard one is to get the last position out. Exit. That's the hard one. Because what will happen is you will generally have this high test bar that will happen. And that's the hard one. That's the one that they generally struggle with. You will see potentially this happening, that bar at the top up there. Why? Because the market was going up. They've taken that last position out, and all of a sudden, with their taking their liquidity out, the market drops like that because it's such a big position. Okay, and that's generally why you have these high test bars here, where there's a big position taken out of the market, where the market is now, there's not enough driving it up anymore. Okay, so that's the difference. We have to have proper structure in the market for stop loss hunting to occur. Now, again, it doesn't happen. It just doesn't happen in sort of no man's land. We have to have decent levels. We have to have those levels there. And when we have those levels, then it comes to fruition. Then it can be done. And that's the idea. So we need to just make sure when we're trading the likes of these levels that we understand that happens. And if we get stopped out, sometimes the best thing you can do is jump back into the market, okay, at that same level. So if we look at BTC, for instance, chart. So look at this level, 1, 2, 3, 4, 5, 6. There was no manipulation of that there. Okay, there was no manipulation of that. Okay, there was a talks of this one here being a stop loss hunt there, but theoretically, no, it's not. Why? Because the level is still here. It just came down to this level here, come to that area. We had that bounce. Now, the manipulation of this market here, that can be manipulated very, very easily. That can be manipulated very, very easily there at that particular point. So you see how weak this market is to the downside. You can see how weak this is to the downside. How many stop losses would be underneath this? How many stop losses do you think? Now, I know that we can't trade the likes of crypto at the minute with as a CFD, but there's other countries that have to do it. Loads of other countries. You can just go to a broker that has regulation in a different country, and you can trade it here in the UK with leverage. And we can see here that there's a big old downward trend. Look, it's coming down nicely. How much buying power will be there? Very little. How many people would have jumped in here as a buyer, jumped in here as a buyer, jumped in here as a buyer, and actually had a stop loss underneath that? Loads of people. Or people who jumped in at 60,000 and they would have their cutoff level just below half of it. Okay, they would have their cutoff level, their stop loss just below half. So the chances of manipulating that there is very, very real, and that's the thing that we have to understand, and that's what we have to sometimes do. I don't know whether you've ever seen when I'm putting a stop loss, I sometimes leave an extra little bit here on the bottom. Sometimes leave an extra little bit here in the bottom. Instead of putting a stop loss there, I'll put it, say, there somewhere, and leave an extra little bit because I'm afraid of that little bit of manipulation. And it doesn't massively come down too far sometimes. Okay, depends on how much liquidity and how much risk to have. And then what happens is, once that happens, we generally get this happening. Well, get rid of that. We generally get this happening, and the market takes off like this. That's generally how it goes. Look, the market takes off like this. Then you would have sort of the whales come out with their take profit, and then the market generally goes back down to this level. Okay, because this was all driven by generally one buyer, one person moving the market, manipulating it, and then it generally comes back down. Now, I don't remember if you remember MS, so Marks and Spencer, or Morgan Stanley. I keep calling them Marks and Spencers. The first trade that we took on this chart. So the very first trade we took on this one was over here, was right there. Now, at the time, I was a little bit worried that we could have a potential lower low at this particular one. So I don't know if you guys remember that when we took this trade here, that was there. I put an extra little bit on the bottom here. I normally wouldn't put that much on the bottom. I put an extra little bit on the bottom here in case, because we had 1, 2 touches, 3 touches. This is the fourth, in case we had a little manipulation there at that particular point to the downside, which meant that our 3-to-1 had to go a good bit further at that particular point for us to hit a 3-to-1. But like I explained, it would have been worse for us to get triggered out on a stop loss here than have to wait for an extra 3 or 4 days for us to hit our anticipated take profit. And that's why our stop losses is sometimes so important. Now, obviously, I'm talking about sort of CFD trade on this one, but you could have bought this as the underlying asset, and you could have still put a stop loss there and an entry there as the underlying assets. So some people trade underlying assets the very, very same way as I trade CFDs here. And then look what happens. It goes up, comes back down. And look, see that low? The bottom is just there. Just there. Now, as it happens, we can see that one is a fraction. This one's a fraction lower than this one here. But again, if we look at the spread, you probably would have been triggered out of this as a loss. I know 1 or 2 people that were triggered out of here as a loss because they didn't give that extra little bit here on a stop loss that I did. And now look where it's gone. Now, in this particular one, did I anticipate this one? No, I didn't anticipate on this one. Why? Because generally with the likes of the stop loss hunting, this is a trend line. It doesn't happen on trend lines. Okay, it generally happens on horizontal levels. It's the big old levels that everyone can see. Okay, that's the one. They're the ones that we see it on, as the big levels, the big horizontal ones that everyone can see. The likes of the one on Bitcoin, the likes of Cardano, the likes of this one here. So 1, 2, 3 touches, and it came back down and double bottomed. Whereas here, I was never fearful of that. And that's why, look, I didn't leave as much on the bottom here because I was never fearful of that happening. It went up, come back down to entry, double bottom there, and then took off. But I was never fearful of that getting stopped out here because it was on a trend line rather than a horizontal. So when we're talking about stop loss hunting, we're talking about generally horizontal levels. So it's something that happens regularly at that particular point, but not so much on the likes of trend lines. Has anyone got any questions on the likes of stop loss hunting, the structure of it, what we should be looking for, how to identify it? Has anyone got any questions that they want to ask about it? Yeah, I'll have a look at Jemiah now next. Nice and clear. Okay, it's just something that's come up in the free chat, and I wanted to have a look at that just to rectify, because on the free chat room, I know we don't go into, myself and Ben don't go into much detail on the free chat room, whereas on the paid one, if someone come up with something like that on the paid one, myself and Ben will go into a little bit of detail about it. But that's the idea of the paid chat room and the trade calls and stuff that we have. So that's the idea behind it. Jemiah. Levels of fraction high. So Jemiah is back at that level there. Now, the problem with this is that it is a downward trend. Do I think that'll hold? Probably not. Probably not. We had a big old buying bar at this particular point. And looking at the way the structure is slowly coming back down, I don't see a massive jump on this. What's the pre-market on this one? Has anyone seen the pre-market on this? And anyone who wants pre-market, just type in trading view. If you go to trading view, it gives you pre-market. I go to charts. Pull up my red list. I know it's down here somewhere. I think it's near the bottom. Red. There we are, Jemiah. And it's down a little bit in pre-market, fractionally. Yeah, I don't necessarily see a bounce on this. I have 2 positions in it here, and it's just something I will hold long term. But if it goes down somewhere around here, I will buy it again at $10. But again, it's only 1% of my portfolio, and let's see if it takes off. But we have to have a couple of good earnings on this for this to turn around. But no, it's not something. There is a level there, and it may be something that you're looking to take a little punt on. But if we're looking at the structure, so it comes down to here. We have this big old gap down to this level, and this level we have the buying bar straight off it. How come the pre-market watches is a completely different price to trading view? Then pre-market watch sometimes is not updated or refreshed. So it's sometimes not refreshed, or it's sometimes not updated. But the one that I sort of go by is here. But also, if you want to make sure and see which one is correct, just put in Jemiah pre-market into Google. So 1832. Okay, so sorry, bear with me. Yeah, it says it's down 2.4% of pre-market, so 1788. So it's a little bit different here as well. So is Jemiah 1788? Is that pre-market on the market watch? But again, it all changes. This changes quite regularly. So by the time this gets updated, it could be up a little bit in pre-market, or it could be down a little bit in pre-market. Yeah, so we have three different pre-markets here, and they've all given us three different prices. So 1788 here on Google. We have 1823 here on TradingView, and the pre-market watch, it's 1791. So it moves. It depends on how quickly they get updated. Who knows which one is the real one? So the idea is, if you want to check when the market actually opens, see which one is the closest, and then just stick with that one, Ben. All right. Is there any correlation between stop loss hunting and trading volume? E.g., volume goes up or down, institutes manipulate the market. Okay, so if I'm putting in 2 billion into the market to drive it up, do you think the volume segment will go up as well? Absolutely. Absolutely. Of course it will. Now, the problem with the likes of this is then you get so bogged in with something like volume, okay, that and I speak to people all the time about moving averages, about stuff like that there. And look, again, you end up getting caught up so much on watching one indicator and one particular thing that you forget the rest of stuff, and you go, okay, so it's like a shiny new penny. There's a volume bar here that's gone up, okay, and the problem is then that you have the volume bar here, then here, then here, and all of a sudden you have the volume bar is like this, but the market here is going down. And that's the problem, is that people get so caught up in the likes of this here that they are forgetting all the rest of the rules that are here. So we have to have it in the correct place. We have to have sort of horizontals. We have to have support and resistance. You have to have an overall trend, but you have to have a hard level. So in conjunction with everything, then yes, you can add the likes of volume. You can have the likes of those there as well. But the problem is that people get so caught up on one particular thing that they've learned that they forget about everything else. Okay. You could even use divergence, convergence. You could even use, if you think this market is going to go here, instead of jumping in right there on that and your stop loss here, what you could do is you could actually have your entry there on the break of that high and get rid of those two. I mean, you don't necessarily have to get in at the bottom of this here. Your entry could be a little bit later, which means then you don't get triggered in on you won't get caught on that way down, because you've not been triggered in the way up. Because remember, we have to get triggered in the way up to get caught. So it depends on how quickly you, or how tight you want your stop loss. Okay, so we'll have a quick look at some of the ones you guys have suggested. Mouse. So let's have a look at PayPal. So PayPal has come back into this sort of trend line here. It had 1, 2, 3 touches on that level. And we have sort of a little sort of channel going on there, little tiny one. So is that a valid trade there? Is that a valid buy? Entry there, stop loss below here. Now, are we afraid of stop loss hunting in this particular scenario? So are we, one, is there a trade there? Yes to the yes or no to trade. And two, are we at risk of stop loss hunting at this area? Yes or no, and put SH beside it. Yes to trade, no to both. Yes, and then no. Okay, cool. So the general consensus, no, well, there's no chance of stop loss hunting here, but there is a chance that this will continue dropping. That's the difference. We're not looking at the stop loss hunting here, but there is a chance that this will continue dropping. Now, why is there a chance of PayPal continue to drop? What was the big news that happens with PayPal in around this area? Can anyone tell me? eBay. eBay have decided to stop using PayPal, if I'm correct in saying that, or restricted the amount of payments that they're taking from PayPal. Okay, I haven't read into it, I haven't delved into it in too much detail, but that's the big one. So PayPal or eBay are moving away from PayPal for their payment processes. Okay, so that's the big one there. Now, how much of a dent will that make to PayPal? That's the big movement there. So if you think that PayPal is still has room for growth, and this is the end of that drop, and shareholders are happy now and investors are happy for this to continue going now, then we jump in on the likes of this. So we can still have a look at this, but that's the big one with this one. We have a bit of earnings, okay, that wasn't as quite as good as expected. But remember, news has dropped this down. So we're looking at so PayPal has violated the federal securities laws and are engaging in unlawful business practices. July the 29th news. But every company does it. Every company does that. But again, it depends on whether you are happy for this to go up or go down. Now, looking at the structure of this, I would expect this to go up. But do I expect it to break this high? Probably not, looking at the structure of this market. But again, it could equally drop down. So is this a trade that I'm taking? No, this is not a CFD trade I will take. But because I say that, it'll probably now take off and hit 400. Okay, but again, that's my opinion on this. The structure of it is not good enough for me at the moment. The next one that you guys asked for was Ford. So again, Ford is back at this level. So rather than me analyzing what's going on, you guys can see that there's a level that I've put in. Let's see if I zoom out. It's bounced there. Look, so that's that level. We're back here again. So is there a trade here long on this? So are we happy to take that along? at that particular point. Yay or nay? What's your opinion? Yes or no? Bubbles, no. Cassie's yay. Andy, no. There's no upward momentum. Carol, no. Stefania, no. Adam, no, not yet. Marcus, there's a 50-50 chance. My stop loss is at 13.25. Okay. 13, maybe scale in. As a CFD, no. Probably the dumbest answer I've had. Sorry. No trend. Now, for me, looking at the structure here, so there's a low, okay, which broke that level, which tells me that this level has been broken before, okay? Secondly, that there's the high, come back down, there's a lower high, come back down, lower high, come back down, lower high. And then, yes, this is higher than this one, but it's lower than all these again, and it's come straight back down to this level. So for me, it just, looking at this structure, it looks like to me there's more downside here than there is upside. So for me, the next entry point on this is the next entry point is somewhere around here. That's for me. Well, and it's based on this 1, 2, 3, 4 touches. That for me is where the next level is, next entry. So it's not something that would be on my radar at the moment to jump in on, because I don't see the value in that there at the moment. I don't see that level as strong enough. Why? Because it's broken it here once. This close was below it again. All right, now it's a tiny bar. So if you get in this as a CFD and you have a little jump, even if you have this jump here, you have hit your 3-to-1. But it depends on how risk to reward you are on this particular trade. As the underlying asset, I would definitely not buy it as an underlying asset. Why? Because look at the run. Look at this run. I think we're at the end of this run. I don't see this doubling or quadrupling in the next 6 months. I see this just pinging around this sort of level or a little bit lower around this level for a little while before they actually start doing some proper sales on the electric cars. We find out how good they are, so on and so forth. So that's my analysis on this one. SoFi Technologies. Oh, wow. Know absolutely nothing about them. There's not a whole lot else I can do here. We have that horizontal level there that's broken. Okay. If it comes back to this level here, potentially, but there's not a whole lot else I can do on this particular one. Whoever asked me to look at this, if it gets down to $10, you potentially buy it because that's low. But other than that, then no. Can you please send me the link to your training course? Gladly, Monfair. Here is the link to my website. And then the training course is on the website to everyone. Okay, copper is infuriating at the minute. So copper has gone sideways, and it has had a massive drop over the last couple of days. It sort of made a lower low here now. you have sort of two choices: jump out of it now and potentially have a small win, or you just sit through it and see where it lies at the end of the expiry. Our stop loss is down here, so we're getting close to the entry point on this. So again, it comes down to whether we should take this or not, or whether it should be time to buy or jump out of it. Unfortunately, we didn't jump out here at the 2.1 win. But again, that's something we have to live and die by with our trading. Again, we have a 5-1 winner previously on this. So even if we get out or break even, we're still not down on the likes of copper. So unfortunately, it hasn't played out like we wanted it to play out. We thought this was it, lovely, and it would go on another percent, and it didn't. So I went up to 2.1. And I know I put in the group that anyone at 2.1 manage your trade as you see fit. But I think, it expires on the 29th of this month, which means that everyone will be out of trade at the 29th. So you then have a decision to make. Do you jump out now? Do you play the long game? Are you someone who is, well, look, Henry, I have a stop loss there in place. If it hits my stop loss, I lose 1%. If it doesn't and it goes back up, I'll make some money on it. And that's a decision you now have to make. But is it looking promising? No. Do I expect it to hit the stop loss here? Probably not. I don't. It seems to be flittering around this level here. It hasn't reached this low again, but it seems to be flittering around this. But again, let's see what happens tomorrow. Tomorrow, we could very easily see a big buying day tomorrow. And that's the problem with the likes of this now. We're getting one buying day, selling day, buying day, selling day. But what's going on in China hasn't helped this at all, which is a little bit annoying. So they are feeling the repercussions of this as well. I think there was one more before I go to Oatly. Did someone ask? Copper, Ford, PayPal. Okay, so we'll go back down to the bottom here. Oatly. Palladium dropped as well yesterday, did it? Oatly Group. Did someone actually put that in? Dave, what am I supposed to do with this? What am I supposed to do? I have no opinion on this, Dave. None whatsoever. Absolutely zero. If you bought at the IPO, you're down money. If you didn't, are you looking to? Yes, Etoro. Yes, I've invested in Etoro. Bidzu. Chart. So I'm actually down 10% on my Bidzu position. We're back to that horizontal level there. But again, the likes of this is, I fully expect this to turn around. Absolutely. I have no fear in the world that this will turn around once all this nonsense is sorted out. But it's one of these ones we have to sit through. Yeah, Bubbles, have a nice day as well. So it's just one of these ones we have to sit through. I know that Ben is in Dayu. I actually have placed an order. Well, I tried to place an order a little bit earlier on, but it wouldn't let me. And because I have an order on it, but I just canceled it. So my order is going in above that red bar. So I'm not trying to get in like you guys have gone in with Ben. I'm not trying to get in and predict the bottom of it. What I'm doing is I'm putting my entry at the top of the last bar. Now, I had my entry here at 380, and I didn't get triggered in this red bar, or this one, or this one, or this one, or this one. So now I have my entry there. So I'm waiting for it to go down. I'm waiting for it to get triggered in. And when I'm triggered in, I'm in, okay? But if it continues to go down and doesn't trigger me in, I'm happy days. I'm getting a better price every time this drops down, okay? So that's it. No, I'm looking to buy Dayu, but again, I don't think you can sell it on Etoro. You can't sell it. The sell button is grayed out. So at the present moment, that's the idea behind it. I'm looking for it to have a jump. And if I buy it here and it gets a jump, and look, because these jumps could go very quickly up to $6. These jumps, that would be 100% straight away. Why has it fallen so? Why has it fallen so much? It's all to do with the delisting, with the likes of the investigations going on in China over the companies that are listed on the Nasdaq or the US stock market, and they're getting investigated, all that sort of stuff. So China are just a little pissed off that there are stocks that are listed on the New York Stock Exchange rather than the Chinese one, and that's what the big hullabaloo is. You have Douyu, you have Baidu, you have Alibaba. They all have the same drop. FT, the last one is FTCV, and this is Etoro. So I've jumped into Etoro and I jumped in. I think it was just a little bit above that line there. So I'm down 3% at the moment, and $10 for me seems to be a pretty nice level, to actually have this. Okay. Alibaba, but Etoro would be a massive long-term trade. It's not. We're not looking. You could trade it. But it's a big, massive long-term level or long-term trade. This is not a short term. This is not in and out of the market. This is something that I will look and hold for a while. So the next level on that there is at the 180 level. Yeah, Docu, all the Chinese ones are all long-term now. Just it's sit on them and just wait. It was like, remember when oil dropped down to it was minus $30 a barrel, that contract. It's like that. You now have a look at them. You now have a look at them and then go from there. So the idea would be is that you leave it. So someone says the pre-market is at 176. So again, the problem is it's not following these the general rules of thumb. It's not following technical structure here now. Why? Because it's dropping. But again, if you think that this is going to continue dropping, look for shorts. Look for shorts on it. Okay. So this is like the bottom of the pandemic. We're trying to find the bottom of this move. And if we can find the bottom of this move, then there's a huge turn on this. There's a huge upside on this. The upside is exponential on it. But again, is you have to sit through a little bit of red before it happens. And just to give you a little idea of that is Michael Burry. Remember Michael Burry, who predicted the housing crisis? He was in a short, or he was in a short in the housing crisis for 2 years before it actually turned. His fund was down, I think it was about 34% by the time it actually turned. And he ended up 590% up on the fund once he got it right. But so the idea is we're never ever going to catch the bottom. So the idea is sometimes you have to sit through them, but these are all underlying assets. They are definitely not CFD trades. Okay, everyone, been an absolute pleasure. Thank you very much. And I hope you have a lovely evening, and I will speak to you all next week.